Hi, thanks for joining me. Last week there were some questions in the comments, and one was, how can you see obvious strength in a market? And then the follow-up was how to see obvious weakness. In the principles that I'm showing, all the bars and all the price action have mirror image opposites to each other. On this chart in front of us, we can see we've had strength in the background, prices in an uptrend. We've had a very widespread up bar on pretty good volume up to this point. You can see down here, and prices stalled and moved into a consolidation pattern across here. And here's probably your breakout line that you're taking note of. This is a consolidation happening, but then prices moved up, and you've got an obvious upthrust, a price bar that's formed with a wide spread going above all the previous recent trading and has closed poorly on good volume down here. Pretty good volume, and that would make you start to wonder if this was actually turning into some sort of sell zone or distribution. Now, if I get rid of all of that and we turn it upside down, you'll see now the chart's the mirror image opposite of what I was showing before, and that upthrust is now a shakeout on high volume. Now you can see here's the breakout line now, and now it's the breakout line for an accumulation zone or a potential accumulation zone. And that upthrust is now a shakeout. So you can see it was the mirror image opposite of what we were seeing before. And you've seen price move lower. You've seen possibly support coming in and some form of accumulation pattern. You've got your breakout line here. You've had a test of the breakout and price has come back and it's testing the strength of this accumulation. You've had a shakeout. I would imagine if I was watching this market, I'd be looking for some form of test next. Little test bar on lower volume. And if that was the case, I would then expect price to push up and perhaps make a secondary challenge to that breakout line. You can see that the shakeout and the upthrust, there it is the upthrust, are the mirror image opposite to each other. Okay, we'll have a look at another one. Okay, you can see on this one, price has broken out, it's accelerated higher. Price has then formed a nice little consolidation. It's a nice consolidation too, because it's being done within 50% of the actual acceleration higher. So that's pretty good. Then you've got, at the end of the consolidation, a little mini shakeout, and that's here, and a little mini test, and that's here. A test and a shakeout often equals a breakout. And then in response, price pushes higher. And then once again, you see a test bar, but volume was a little high, and then a no supply bar or a no supply test. The volume was very low. Selling pressure is very low. Price accelerates higher again. Price accelerates higher and tests, and prices and volume is very low, and price accelerates out again. Okay. Now we'll flip the chart upside down. And now you've got exactly the same thing in reverse. You've got a breakdown below a trading range. You've got price attempting to recover and failing to. And you've got an upthrust on moderate volume. And then you've got a no demand bar. And you can see the very low volume suggests there is no demand left. Buyers are done, and price is likely to break down a second time, which it does so. And then you can see price attempts to recover, a little bit of volume comes in, but price could make no ground higher, and then the next bar shows no demand. There's no demand in the market whatsoever. Price is likely to break down again, and it does so. Then you've seen price here, after 2 days of, or 2 bars of pushing lower, volume is very low, there's no demand in the market, and it continues to break down. So those test bars became no demand bars, and the little mini shakeout bar here that we saw became a little upthrust. Upthrust and shakeouts are very similar. No demand and testing is very similar. And price action is exactly the same. Here you've got a chart that shows price moving down. You see some form of climactic action take place, and then an accumulation starts. As price goes sideways, supply is mopped up. Then you see a breakout, and possibly then a test of the breakout. Then if we flip that chart upside down, I hope you can all see what is obvious now. Prices accelerated higher. You've had weakness come in on very high volume, and then you've had what looks like some sort of distribution happen, and then you can see price has broken down below the lows of the distribution zone. This is a breakdown in price, and then over here you can see where was testing happening before on the breakout. You can possibly see no demand. You can see down here there's only very low demand. So the pattern is exactly the same, but the mirror image opposite, the reverse. One was an accumulation zone and breakout. This is a distribution zone and a breakdown. One more. You can see on this chart 2 very obvious high volume upthrusts. You can see price broke down below previous support. You can see no demand in the market here. Then price breaks down further. There's an attempt to stabilize the market, and then another breakdown. This is what happens when you get weakness in the background like this, and those who have possibly been holding the market up and bidding it higher have sold out and are no longer supporting the market and defending against supply. When price breaks down, there's no one to come to the rescue of the price action, and in turn, price breaks down. You can see price breaks down below the previous level of support. It's unable to recover. It breaks down again. There's no ability for the market to recover again. Here's the previous support, and price breaks down again. Now if we flip the chart upside down, and now you can see 2 shakeouts, or probably some form of buying or support coming into the market. You can see price is broken out above that level, accelerates higher. There's a brief period of consolidation. Price accelerates higher again, tests a low of the previous lows and recovers both times. and then price breaks out again. So you can see that the price action shows exactly the same, but the mirror image opposite when you flip the chart upside down. And sometimes it's handy, if you're looking at price action and you can't decide what might be happening, is to take a copy, put it into a program where you can manipulate the image and flip it upside down and have a look. And you'll soon get an eye for it and understand what might be going on. Then you can flip it back and look at the original image or go back to the original chart and look back and forth for a while. Hopefully that was helpful to you. Thanks again. See ya.